What's going on, guys? Welcome back to another video. In this video, this is going to be the second options lesson that I am going to be bringing to you guys, and we are going to go over the most basic strategies if you want to sell options. So if you guys enjoy this video, please go down and hit the like button and hit the subscribe button, and make sure you turn on that notification bell so you're notified every single time I post a new video, and you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. At the end of this video, we're also going to be announcing the 3 people who are going to be the winners for the merch giveaway. So make sure you stick around until the end to see if you are one of the lucky winners. So before we get into the bulk of these strategies, let's just go over briefly and do a brief recap if you are new on what exactly options are. So there are calls and there are puts. If you are buying calls, you are bullish on the stock and you think it is going to go up. If you are buying puts, you are bearish on the stock and you think it is going to go down. When you purchase calls, you own the right but are not obligated to buy 100 shares of stock at a specified price, and the contract expires on a specified date. Similarly, for puts, when you buy a put, you own the right but are not obligated to sell 100 shares of stock at a specified price, and the contract expires on a specific date. So if you are a little bit confused on what that exactly means, make sure you go over into the last options trading lesson video that I put out, and all of your concerns and questions should be answered in that video. So now let's get into the first strategy that we're going to be talking about when you want to first start selling options and collect those juicy premiums. So in options trading, there are 2 sides to every trade. There is the buyer and there is the seller. So in this situations, we are going to be talking about the other side being the seller. So I usually buy options, but selling options can make you a lot of money too. So we're going to take a look at this first strategy called the cash secured put. So essentially what you are doing, you are selling the right to another party, another individual, to sell 100 shares of stock to you, meaning you are the one buying the shares at a specified price on or before a specified date. And for this agreement, you collect a premium for entering the trade, but you have to put up collateral in order to own the stock. So let's take a look at an example that I've written out for you guys. So if we come here, so let's just say stock A is trading at $50 and you have some extra cash kicking around in your account and you would like to make a little bit of money on this cash that you have sitting around, and you want to do it in a relatively safe way. So you actually like stock A long term, but you think it is trading at too high of a price. So as we said before, the stock is currently trading at $50. What you would then do is you sell a cash secured put at the $40 strike, and let's say you are collecting a $500 premium in order to enter this trade. The only catch is that you need to put up $4,000 of collateral, since that's what it costs to buy the 100 shares of the stock at 40, since 40 is going to be the strike price, and you are agreeing to purchase 100 shares from somebody else at the $40 price point on or before the specified date. Now, there are a couple of other reasons why you would want to sell a cash secured put, other than what I just talked about before. You think the stock is trading too high and you want to get in at a lower price, and you collect a premium in order to do this. So let's take a look down at the first strategy. This is going to be the free share strategy. It's what I call the free share strategy. This does take some time to do this on, but if you are able to do this successfully over a long period of time, you can actually get some free shares. So ideally, you don't want to get assigned when you are selling cash secured puts, which means your collateral will be released and you actually have to buy the 100 shares at that specific price. So let's say you sold this cash secured put at $40 and the stock was currently trading at 50 and the stock went down to 32. It had a crash. You would have to go and buy those shares still at $40. So that's the only way really this strategy gets you in trouble. But usually these are going to be pretty safe if you sell them deep enough out of the money. So again, ideally you do not want to get assigned, which means you would have to buy the 100 shares. Since when you sell options, you are obligated to buy or sell the share amount. So we'll go over a little bit more on that when we talk about the second strategy. We're going to talk about something called the wheel strategy, which is something you can do if you end up getting assigned on these contracts. So now with the $500 of premium that you collected, this is your money to keep, and you can do whatever you want with it. You can take it out, pay bills, go buy something nice, but we're an investing channel, so we're going to talk about how this money can make you more money. You can actually go and then buy 10 shares of stock A at the current trading price. So you use the premium and you buy the same stock that you sold the put on. So if you can do this successfully 10 times and you can collect $500 each time you do this and the contract ends up expiring worthless, you will end up getting 100 free shares of the stock. Now, it's not technically free because you are taking a significant risk with the collateral that you are putting up. But in general, this is oversimplified, but we're going to talk about some real life examples in a little bit. But this is essentially how it works. You are collecting premiums, putting up the collateral in order to do this, and you are collecting money for the right to buy 100 shares of the stock at that certain price. Now, the second strategy that we're going to go over is very similar, but it is the exact opposite. So if we come down here, we're going to look at selling covered calls. So in this case, you already need to own at least 100 shares of the given stock in order to do this, since each options contract controls 100 shares. So essentially what you are doing is you are selling the right to someone else to purchase your 100 shares from you at a specified price. So always do this at a price higher than your cost basis, or else you risk actually having a loss on your overall position if your contracts get exercised. So this is essentially creating your own dividend. So if you own a stock that does not pay a dividend and you're kind of like, well, I wish I could receive some money for owning this stock other than the actual gains of the underlying, you can actually do this strategy to make your own dividend. So let's go into an example. Say you own 100 shares of stock A and it's trading at $50. So that's a $5,000 position. You then sell a $60 strike call option. And again, we're going to oversimplify this, but let's say you collect $500 of premium. You are agreeing to sell your 100 shares at $60. So you are actually making a 20% return plus the amount of premium that you collected. So it's not a bad deal, but if these shares actually get assigned, you're missing out on some gains, but you did get to collect a premium for doing this. So you're actually collecting a 10% return for this agreement since you are collecting $500 and the position size is worth $5,000. So now, why would you want to trade cover calls other than actually creating your own dividend? Again, we also have a free share strategy. If you are able to complete this successfully 10 times and you actually reinvest the premiums that you received into shares, you can actually get your cost basis all the way down to $0 since you are doubling your position. So if you end up making $5,000 from the actual covered calls that you sold over time, your original investment technically becomes free. Now, it is not actually free because you do have to pay short-term capital gains taxes on these short-term call options that you sold if they are not a year out. So this is oversimplified, but it is to illustrate the power of selling options against shares or cash in your account. If you guys have any questions about this, please comment down below. Sometimes options are a bit complicated, but once you get the hang of them, they're a very powerful tool that you can use to your advantage to supplement your long-term portfolios. So now let's go and take a look at an actual options chain to see what this would actually look like. Now you're going to see that the actual premiums that you collect on the stock that I'm going to show you is not going to be even as close to this 10% return that you see in these examples. You're going to have to sell these calls or cash secured puts on stocks that have a much higher implied volatility and high expected move in the share price in order to collect more money. But if you want this strategy to be safer, you want to sell options on stocks that don't move a whole lot so you can be successful over the long term. So we're actually going to be looking at Apple's options chain, and we're going to be looking at March 19th. So let's say you own 100 shares of Apple. So that would cost you about $13,600. Now, if you were to sell this $150 strike, you would collect $185 in premium per contract that you sell. So that is not even near close to 10% return. But if you can continuously do this over years and years, you can make your positions in Apple free, and you actually can make your own dividend on top of the dividend that Apple annually pays. Now let's take a look at the puts. If you wanted to sell the $125 put strike, you would have to put up $12,500 in collateral to collect $182. So Apple has a pretty low implied volatility. They're not expected to move a whole lot. That is why these premiums are cheaper. But if we were to go over to a company, let's say Palantir, they're going to have a much higher implied volatility, and we're going to have a much higher expected move. So you can see that the implied volatility is a lot higher. And if you owned 100 shares of Palantir, that would be about $3,400. And if you wanted to sell the $30 strike, you would collect about $33 in premium. And this is just on a weekly. So you could do this every single week up until you get free shares. Now, if we go out up until the March 19th expiration day, that week talked about in Apple, the $30 strike is going to be a lot more expensive, and you're going to be able to get a lot closer to that 10% return that we were talking about in the examples that I outlined for you in the Google Docs. So now we're going to get into some of the giveaways. I hope you guys enjoyed this video, but make sure you stick around so you can see if you won the free merch. So let's get into this giveaway. If we come over to the YouTube video that you had to comment on in order to enter into this giveaway, what we're going to do is copy the URL from this video. So I just copied it. We're going to go over to the random YouTube comment generator. We're going to copy this in right here. So copy, and then we're going to come down and hit get YouTube comments. So then we're going to be picking 3 individuals for this. Now, thank you guys so much for 10,000 subscribers. So let's pick the first winner right now. So the first winner is going to be Timothy Grays. Timothy, if you want to claim your free merch, send me an email at shortthevix917@gmail.com, and we can figure out how we are going to get this to you. Now let's go over and select the next comment winner. We're actually going to have to do this get YouTube comments again. And then we're going to come down and hit start. Now we got, sorry if I mess up your name, Hatem Tunai. Just send me an email, again, shortthevix917@gmail.com, and we'll figure out how to get your free merch to you. Now you guys can pick anything you want, and just let me know, and we'll get it to you. Thank you guys again. I'm super appreciative of all of the support that you guys have given me over these last couple of months. So now let's pick the last lucky winner. So this is going to be Minsu Kai. So send me an email, again, just like before, shortthevix917@gmail.com, and we'll get you all of your stuff. So that's going to be it for this video. Congratulations to the lucky winners on the free merch giveaway. We're going to do a lot of giveaways like this in the future, so make sure you guys stick around. Hopefully they're going to get bigger and bigger as they go along. Hopefully we'll be able to do a cash giveaway anytime soon. So thank you guys so much, and I'll see you guys in the next video.